Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Thursday, October 31st, 2024. Big earnings day coming up with Apple and Amazon on deck. I shared my thoughts on that, so we'll see how that goes. The charts are indicating to me to the downside, but like I said, today's sell signals, call it preliminary, call it tentative, whatever you want to call it. There's solid breakdowns below the trend line on QQQ, but as I've often said and noted over the years, breakdowns that occur just before a very big market moving event, such as an FOMC announcement or earnings of companies of the magnitude. It's not just Apple. You have Apple and Amazon tonight. So, that has a potential to change the trajectory of the charts, but as of now, the trajectory looks to the downside, and we'll the good thing is we'll know soon. We'll know soon enough. Hopefully, we'll have a definitive resolution after the close today. Or really, like I always say, you want to see how the market trades tomorrow. But if they crap out and they're going down overnight, we already have the breakdown. The breakdown will be built upon, and what happens is the farther you get away from a level, whipsaws usually occur about here. You get down here. If Apple and Amazon just completely crash the futures tonight, and it holds into tomorrow, obviously, and that's a pretty good sign. So, how to trade it. As I said, it's gambling if you go too aggressive. We got a couple check marks today, like I got out to you with, look at, and I told you they beat Meta and Microsoft. That's all they do is beat. It's, they're in the game of that. When you're a $3 trillion company, you have the means to effectively manage your, analysts and everything else. And they're earnings juggernauts, but all companies, if these long-term targets pan out, just remember that all companies, the stock market, all those things peak when everything is as rosy as it could be on peak, peak earnings, record earnings. Record low unemployment. That's what I think a lot of folks just don't get. The ones that are out there saying, no, there's no risk of a recession in the stock market because look at the consumer. It's all a vicious cycle, and it's all really this. So. Maybe I take an overly simplistic view to the stock market, but if I'm right on the call, what happens is this drop that I'm calling for, which ultimately culminates in about a 50%, close to 50% haircut in the Nasdaq 100. Every tick down, a little 5% pullback, 10 doesn't really do a whole lot. Anything much more than that, it's incremental and exponential. What I'm talking about is consumer confidence. This is where, we're at casino mode in the stock market again with crypto. And I told you lately, it's, I saw it on Interactive Brokers. Now I think you can do it on Robinhood too, or one of those, armchair investor platforms where you can bet on the outcome of the elections. So the stock market, in my lifetime, it's always been a bit of a gamble, and there's always been speculative pockets, but it's an outright casino now, as I've talked about. So many just don't see that, the underlying. Now the problem with bubbles, guys, they can continue on. Here's what I want to do in this video. I'm digressing. I want to cover what I think is one of the great trading op right now, and that's the metals and miners. We've been gaming some pullbacks in them recently, but I think a bigger move is at hand. And I'm just starting out with QQQ just because today's big day. Like I said, I was pretty clear. Breakdown is a breakdown. You can take it on face value, but you got to take it with a grain of salt, in my opinion, until Apple and Amazon are out of the way. And then all the better, a solid daily close. I want to see, the bottom of my range. Remember, this range I have not tweaked since June 26th. So the levels that I identified, the bottom of it was, tactically done. It wasn't just a random arbitrary where I took a little box. It was resistance, that reaction high before we even got there. And we got there, and it became then the bottom of the market top zone. That was a key pivot right there. And so to me, it's a significant resistance level. You've got the 50-day exponential moving average just below it. That's the yellow line here. Here, I'll turn everything off, and then we'll get to the miners. I want to get to gold and the miners. So you can see the market will often act as support and resistance. You get below there. It's the 50 days, so you don't have the bigger trends like the 200, but you got below there. You had a nice correction. You regained it there, and it was support, and then you lost it there. Once you lost it, they rallied back, got rejected at the 50. Yes, Mark, there's been a couple moves through, and as I've talked about, we've gone nowhere but sideways now for months in the Nasdaq 100. So when you start trending sideways, trend indicators aren't as effective, but it is still a level to watch. Computers and humans sell, buy and sell the 50 and, pullbacks too, and then drops below. And then, of course, the big 200s, that's lights out level. All right, so I just wanted, before then, I'll tell you, just me, I think you can active trade this market today. If we're at support, not so much on QQQ, a little bit lower. These are the levels. Remember, these charts are all in the recent videos, including the futures. I want to show you that. We hit this level right here. These are the same levels I've had on here for a while. So the futures, just like the Nasdaq 100 tracking ETF, QQQ, took out the uptrend line. Again, I'm talking the one off the August 5th lows. Solid breakdown. You don't have to squint to see it. We are at the first minor support level now. This line I've had on my chart for a while, 20,090 on NQ. And we're down. What are we down? Let's see. We're down. Futures are down 2%. There's no floor, but usually you're going to get a little, by the end of the day, a little hopium rally. This move, we're still close to highs. Now, technically, what I see is a breakdown. So I know a lot of people don't see what I see, and especially those that just, dip buyers. So you'll probably, at some point, they'll probably gobble this dip up. And if this level breaks, you had QQQ has comparable support just below. So I'm favoring a little bounce here. And again, it's so small. You want to gain a percent or two bounce, probably 1% or so. You can do so, I think, on NQs here, down to about here, because that's QQQ level. If we, worst case scenario, we go down there. But I can tell you right now, you're probably not going to see a much more than a 3% max before Apple and Amazon tonight. In fact, they'll probably buy it up. Those that are bullish, those stocks. Plus, you got everybody betting the one-day options now, and that kind of impacts the close. So we'll see. But here, let's get to the meat. I just wanted to get that out to you. And obviously, I will follow up, on Apple and Amazon. Maybe not in the after hours, because I always say that, don't read too much into, especially the initial reaction. But if it's a big move, then like I said, you may want to, like I said, if the takeaway is got a lot of downside coming, and it could happen quick. The markets like to do that. If Apple and Amazon, again, not disappoint with earnings, it doesn't matter. It's the market's reaction. Again, like Meta and everything, they're, the media will write any narrative. They'll conjure up a narrative to fit anything. Last night it was bullish when they, those companies beat and they were up, and now today, this morning, the headlines are saying, oh well, the market's concerned they're spending too much on AI. Blah blah blah. Same story. And if they went up, then they would say it's a good thing. So. All right, let's get to the miners real quick. Of course, any analysis on the mining stocks is incomplete without analysis on gold. This is gold, giving you these targets here recently. We had a breakdown there. This is T5, and now I wanted to highlight here. Oh, and I just got, let me get going quick. I just had an alert on AGI trigger is on another monitor as I'm talking to you. I've got the volume off. Let me put that back on. Okay. Bear with me here. I had my speakers off, but I saw the alert pop up on a little window. All right, that's it, guys. Sell signal on gold. These are the targets. Now, let me show you a bigger picture. I know gold's been in a heck of an uptrend. It's in a bull trend. Had a great breakout to new highs earlier this year. And it's been, like I've talked about, gold itself, you're only going to get a couple percentage points on the pullbacks and uptrends. So I'll usually trade silver, GDX, and that's what I'm going to get to here in a second, especially GDX. These are the targets for gold. There's a more significant longer-term uptrend line. This is a 60-minute chart, but I just wanted to reiterate, there's a sell signal there, a breakdown. This is the daily chart right here. And you can see here, those are just little minor trend lines you had right there, break, a little. That was the one I just showed you on the 60, but just on a smaller scale. You can add in here trend line like that. Either way, we're probably headed down to at least the here's a support right here, about 247.16, that previous reaction high, and this intersecting uptrend line. That uptrend line comes off this low right here, early August, right? So that seems to be a common theme. We got those August 5th lows in just about everything. There's downside. The next target, and I think it's likely, is this larger, longer-term uptrend line that comes off the early February lows, right? Mid-February lows. That's what it looks like on the daily chart. So I know this is a busy board, but because I had a lot of lines, little micro levels. Gold was just a great trading vehicle in here in the miners, but that was a sideways trading range, and there's the breakout. So it was, very powerful technical event. But my goodness, look at the scope of that divergence here. Nothing goes up forever, even in a bull market. So that's it. So gold is on a sell signal now. Even though I threw it out as a short, we broke down there. And sometimes you break down a little minor trend line, you push back up, you make a marginal move, and still divergent high. So nothing changed in the technicals. That was a divergent high there, and this was just a slightly higher. And boom. Now I'll do silver real quick. Silver coming up on support right now. Again, divergent high, sell signal there. I believe in the last update I would have given you this level 30.45. That got taken out today and looks straight down. Coming up, pretty good support here. Probably get a bounce. In fact, hold on, I'm going to cover silver right now. Literally like cover my position. It just came a bounce. Silver futures coming up, really good support. So we're going to bounce first, I believe. And then I'll talk longer term. And then I think that level will probably go. Okay, I just reversed me some silver, meaning went from short to long, came a little bounce here. But boy, this, I'm not going to get married to it. Let me show you. Let me get to GDX real quick. So silver, obviously, ultimately follows sooner or later its big brother gold. Sometimes there's a disconnect for a period of time. I'm going to borrow this trend line and just move it right there and show you. That was the one on the 60-minute chart I just showed you as well. I showed you futures and right here the ETF, and then price support. So it's a really nice resistance level. Again, one I think is probably going to go based on these divergences, but probably get a tradable bounce first right now from where we're at now. You can see it as 29.50 to 60 right there. But now GDX, okay, that's one I'm going to finish the video with. So I've been highlighting this recently and telling you we've been trading for months now, all year really, long and short, divergent highs, divergent lows, and it's just like an EKG. This is GDX, a gold miners ETF. Divergent high gives you a correction, then on the 60-minute chart usually is where we get the divergent lows, but you also have these very just clean pattern of these nice uptrend lines. So it's whether it's humans or algos or both, it doesn't matter. They see probably the same thing, these clean uptrend lines. You get ahead of yourself, you get a correction. In a bull trend, they buy the corrections, but look how beautiful that uptrend line is. We're there right now, guys. This is why got to be careful, because sooner or later it's going to go. This was our most recent divergent high. There was our most recent sell signal right there, breakdown. Took the miners down in very short order. They dropped 8% from the breakdown, not from the high, from the breakdown. And here's what it looks like on the 60-minute chart. Again, I shared this with you here. These multiple targets, there's that same trend line. I'm going to thicken it up here because that's a significant trend line. It's the same one I showed you on the daily. So we're coming up to that now. Probably get one last hurrah, at least a reaction off there. Could go through it, and if we do, then that's it. So bottom line, whether we bounce or not, again, I favor a bounce, but whether we do or don't, a solid break, especially a solid 60-minute close, even better on a daily close. It's the same trend line on the daily chart. A lot of potential. When I look at the daily chart, I'm going to give you a level here. Levels I need to add. There's support right there. There is price support here, right there. I might have had it on the 60. I'm looking at this. What am I doing? I'm looking at reaction highs. I'm looking at gaps. Just kind of how my eyes see things. These are the levels right here. But based on the scope of this divergence, we could have a pretty healthy correction that could bring the miners back quite a bit. Let's just right now, they're still in an overall bullish trend. So let's just target 36. You have that peak from back in 2023, back in April. It's, again, it would call a total correction of about almost 20% off the divergent high. And so that's it. So that's from where we're at now. Again, we need a break. You can see we're right at support. We're at dual support now. We're at price support about 39.88 and the uptrend line. So break of that, a solid break. It's going to open that door. First target would be about a 4% drop. And then that 36 level would be about another almost 9.5%. Now let me show you the miners real quick. As you know, I always have, when I load an ETF, I have the components sorted by market cap to the right. And so this will show you kind of what's going on under the hood. As I like to say, an index or a sector is simply a sum of its parts, in many cases a weighted, market cap weighted sum of its parts. Newmont blew up. Newmont's the Apple of the sector, and boom. But at support right now, hence another reason we'll probably bounce here. Good time to maybe cover that short game, a quick bounce, maybe even more. But that's ugly, man. That's a bloodbath in Newmont. That's a drop in just a little over a week or so, a couple weeks, 22%. But again, it wasn't random. We had, see back here, we had, and I did a video, we had a lot break down, and then they had this blow off top. See that volume surge there? That's a buying climax. What they did is they blew all the short. I don't know what happened with Newmont. I'm sure there's some news or something to correlate that 22% drop. But technically, this was a buying climax. You had a huge surge of volume on a near vertical run up, but then a sell signal, a break of that steep uptrend line right there, very well defined. You can probably see it well on the 60-minute chart too. I didn't have it drawn out, but boom, there it is. And that's what that's the leader of the sector, and that's a pretty ugly breakdown there. This is what it looks like on the weekly chart. We were long and strong. The miners back here off the recent lows back in earlier this year, and there's the breakdown. I'm going to move this line up. No, I'm not. I'm just going to leave it there. Let me show you the rest. So anyways, we have Newmont's already had its clock cleaned. Doesn't mean it can't fall more. It's just very, very oversold and at support. But let me show you the rest of them. Here's the thing. The rest of them are just starting to break down or are poised to break down. So I'm going to rifle through these rather quick because I started with the equity markets. I wanted to give you that update there. And I want to just get in all components of so I'm just going to talk fast, highlight what I see. And again, I've been talking about these stocks for a while, and we had that breakdown there of the primary uptrend line. And then the same thing happened. We had this little reversal there. That was probably a massive short squeeze. That was a bear trap. So then the shorts probably got squeezed out. But I think the trend line is still valid, and more so, I can tell you this uptrend line right here, this near-term uptrend line, just like the one I showed you on Newmont, just broke. So, while Newmont, the leader, is banged up, down 22% at support, a lot of these other guys, I'm going to put a little price support here on these recent highs it danced with. But this one's probably going to drop down here to 77. And if it does, remember, I'm going over these as they're weighting in the sector. So they're going to have an impact on it. That's about a 10% drop if that happens. Big, big negative divergence, guys. Based on the scope of this divergence and how bullish, there is a bullish percent index, indicator for, the bullishness in the mining side. I can just tell you it's been a crowded trade. Everybody's been buying gold, silver, or the dollar is going to go to hell in a handbasket. U.S. prints too much money, too much debt. Central banks are buying gold, blah, blah, blah. Yeah, and that's all been part of what the big run-up in gold has been. What I'm trying to get at is this is a crowded trade, and you could get a crowded rush for the exits. So that's why I wanted to get this video out to you. So there's my minimum target, and I can see the potential. I'm going to give you one more here. I definitely need to add a level rate about here-ish. I'm going to put it up a little higher there. It's more of a target zone, about 72-ish. Again, based on the scope of these divergences, we haven't seen anything like this in years. I usually, just takes these, not small, but these relatively small divergent lows and divergent highs. This is how I, position and swing trade the miners for the bigger trades. All these, everything I'm circling right now are the divergent. Had it marked down here, the divergence, but not. You can see that. Sometimes these lines just seem to disappear on my some of my charts, but I mean, guys, these things trade very well to the technical. Sometimes you get whipsaws, but you have to respect these divergent highs and divergent lows. And this one has a pretty darn big divergent high right now, and that could lead to a lot bigger drops. Let me go through the rest of them. Gold, Barrett Gold, GOLD, broke down right here. Is this uptrend line here, coming off a big divergent high. Remember, divergent high, divergent high. You can see the scopes of these drops after the divergent highs in the past. And this one, I pointed them out here. And so the divergence not only didn't get taken out, it's gotten larger since highlighting these back here. So we had the initial trend line breaks, set up the secondary trend line. That one broke. Minor support here, but probably headed lower. WPM, wheat and precious metals, divergent high, steep uptrend line. Again, a lot of these volume and everything, well, not so much on this one, but a lot of them indicative of a potential buying climax, which means we could have some more downside. Either way, this one, you have the next larger, more significant uptrend line right there, but this did just break down. And traders look at these previous, it's not what I wanted. They look at these previous reaction highs as potential support levels. We call them pivots. This one's got some support there as well. But if it breaks the trend line, then you're opening the door to a deeper drop here. And again, big divergence. FNV, Franco Nevada Corp, big, almost slightly, effectively, yeah, equal highs there on the PPO, slightly higher the high on the RSI. Don't have a super strong opinion on this one. I'm gonna move that down there. That's support right there. Let me just move on to the ones that have clear charts, like KGC. I mean, this is a clear trend line, very well defined. Comes off that February low right there. Broke this minor trend line recently. And so look, guys, we can just continue this pattern of breaking the minor trend lines, having this little EKG. But you can see this is what tells you the nature of a bearish rising wedge is these highs, the magnitude of each rally off the trend line is getting weaker and weaker. And that's what divergence tells you. These why I use these momentum indicators. It shows you momentum's been waning. So yes, they're in a bull trend, a strong trend, but the trend is losing strength. And when that happens, eventually you get a trend reversal. So if that one breaks, yeah, I can give you some additional, I'll give you a first target there if you want at 922, but probably coming down here to 831 at least. And that's going to be another 16% if so. RGL, Royal Gold, broke the uptrend line there. This steep uptrend line coming up to the this uptrend line off the lows. Might play around with it. It might form on that candle, or I'll just leave it on the one I had before, with these being little whipsaws here recently. These little whipsaws, and then that's what probably was a stop clearing move for a lot of short sellers. PAAS right on the trend line now, so break of that trend line is going to trigger a sell signal. Big divergence, and again, these are, that was a divergent high there. That was not marked, but that was a divergent high up there at the top, and gave you that big drop there. And that was a divergent low. We were long and strong at the time based on that, and GDX coming up to great support at the time. AGI, trend line right there, right on. I'm going to tweak it just a bit just to come in tight on that those last couple of candles. These trend lines come off, if you want to replicate them, they come off the February lows right there. And so you had this most recent sell signal, and then this would be a much bigger sell signal. And, if you're in any of these individually, bump me and I'll give you, I'll sharpen my pencil and add some additional targets. I'm just kind of giving you the bigger picture now is, again, collectively, you want to see the majority of these break down. Newmont clearly broke down. It kind of started putting pressure on the sector, but the rest of the lot held up. And now the rest of the lot, meaning the majority of them, have either just broken down or are right now at trend lines or price support, where if they go much further, they're going to break down. It's a level right here. It's an old line I had. I don't know why I de-highlighted it, but there it is, 630. Pretty nice. It was, look at all these reaction highs. There's a breakout candle right there. Successful back test. Very important level. If you are bullish, the miners, and you say, Randy, you're crazy, you see things that aren't there, go long here. Go long with a stop below. It's very objective, and I'm not being facetious. You could. I'm not going to go long and wait for a break of that. I mean, maybe I just reverse to see if I can get a quick bounce. But if we break the supports that I'm covering right now, we can. That's the thing, man. When these guys turn, they go full throttle. So by the end of the day, these by the time this video hits you, we could have broken down there below all those. Again, I highly favor one last hurrah off these support levels, at least. And then where to, if you're going to game them, like a stock like this, you look, you got a gap right here. So you maybe the top of today's gap, I mean the bottom of it, or the top of it. Those are potential bounce targets. But again, I do this, I look at it collectively. There's not too many. There's only 29 holdings in GDX, at least on this, according to this watch list. So I watch, of course, GDX, of course, gold and silver. And then, in the euro, US dollar, I've commented on that. I'm trying to keep this video not too long, so I'll maybe follow up with more comments there. We already had that huge drop in the euro, big rally in the dollar, which wasn't priced into gold and miners. It's starting to be now. And I have commented on that recently. AU, beautiful breakdown, back tested, rejected, and another high level back test of the primary trend line right there. Same thing off the February lows right there. So that's a bearish chart. Peaked here with negative divergence. Breakdown is a sell signal. Objective short entries on the back test. And sometimes it'll do this and back test higher again, but it's still below the highs, that divergent high, and then a impulsive rejection off the back test. All right. OR, there's your uptrend line, big wedge right there, divergence, and give you another target zone here, about $18-ish right there. EGO, Eldorado, right on the trend line now, big negative divergence into that most recent high. Okay, pardon the background noise in the video. Got the yard service out there with the blower right outside my office window. BVN, not a strong opinion. It's got big, that was a support zone. Support once broken becomes a resistance. So you have a resistance zone right overhead, and then an uptrend line right here. So a break of that uptrend line is bearish, break out above the resistance zone bullish. We're tension between there. IAG, coming off that big divergent high. Again, I highlighted them here. We had divergence, we had a correction. They got that one last hurrah. Again, indicative of a potential blow off top, which could send this stock easily back down to this trend line. And that would be a total drop from that 633 high of about 30% or so. From where we're at now, it'd still be another 20% if hit. CDE just breaking right now, so there's one breaking support. Nice, well-defined uptrend line again off the February lows, following a divergent high. NGD just broke down. Well, yesterday it had a stick save. It broke, but it hit my first support level, 269. I created that line back on in August 2015, but I updated it today. Might have tweaked it. Moved it. Either way, it's a good support level and will trigger a sell signal if and when taken out. Plus, we already have a sell signal today on the break of the uptrend line there. So that's NGD. AG, First Majestic. Don't really have it marked up, but it's pretty easy to just draw an uptrend line right there off the lows. And yeah, we'll just leave it there. I don't have a strong opinion on that one. GFI, Goldfields, limited divergent high right there. I don't want to force trend lines on these. This one it needs a reaction here to validate a third reaction. But either way, probably going to see these guys come down once they break the support levels that they're at today. If that does happen soon, we'll probably come down to these uptrend lines, and that's where probably be a buyer of mining stocks. EQX, Equinox Gold, divergent high. There's your uptrend line. Yeah, I don't have a strong opinion on that one. MAG Silver. I believe we were long right here off that bullish falling wedge breakout. I think that's when last time we had that. It was like very bullish, the miners, yeah, right here, because it was super duper support. GDX right there, divergent low at support, and that was the catalyst for this whole rally, which exceeded where I figured it would go. But and now we have everything in reverse. Pretty good odds for a correction. So there's CDE breaking down. I might have already got that one. NGD, yeah, I already covered that. I kind of had to get back into my watch list. GFI, I think I just covered that. EQX, MAG, okay, MAG Silver, just breaking right now. Hasn't closed the day yet, but it is currently trading below the uptrend line right there, following a big divergent high. And again, keep in mind, these other divergences, now they were in downtrends. They led to big drops. This one could lead to, you can't say some of these stocks are still off their previous highs. Just be careful. Believe me, I'll continue to update this sector, and I'll let you know if I think we could even see more downside. SAND right at trend line and price support, dual support, so much below 589. It'll take out the trend line and some decent price support. SILV, Silvercrest Metals, that's a sell signal. You don't have to squint to see it. You had a breakdown right there. You back tested it one day and then rejected yesterday. And this is what happens when it's clear to traders that, okay, breakdown back test. Boom, there's that impulsive rejection I like to see following a back test. And got next target's going to be down here somewhere. There's a gap right here. Then probably flirt with that gap a little bit first, but $9 is where it's probably headed to at minimum, and potentially more. FSM, Fortuna, Mining Corp. There's the uptrend line, still above it right now. I'm going to pull it down just a slight hair, and that's that one. I mean, remember this one, some of these already peaked back here. This one peaked, it's a beautiful wedge. I would have covered that in a video because I would have had that trend line created back on June 4th right there, showing you, the measured target for the wedge. That's what that was, and it did a lot more than that. Either way, there's your latest uptrend line right there. And again, guys, if you're bullish, you can buy pullbacks to these levels, and maybe we go up more, and maybe the divergence plays out down the road for a bigger correction after another high. Maybe it gets taken out. We're in some super duper bull market. All I can tell you is these are the levels to watch and trade as you see fit. If you're bullish, buy pullbacks to support. If you think like I do, these guys can go a lot more based on the technicals. Wait for a solid break of those, collectively, the majority of these support levels. EXK, well-defined trend line coming off a divergent high. Hasn't broken down yet, but you can replicate it. Comes again. No, this one comes off the August lows right there. SSRM, SSR Mining. All I have is an uptrend line here. This one's just been in its own little kind of bear market. I mean, it's rallied lately along with the rest of them, but there's a long-term uptrend line. Long-term target is that downtrend line, but near-term, again, birds of a feather, guys. So if, the rest of the sector breaks down, this one's going to have a tough time trying to get up to that trend line there. HMY, 2 more to go. This one and one more. There's your uptrend line, nice and clean. Comes off the early October low right there. And finally, DRD. That one just has a history of, once it breaks these trend lines, it rips. I can add them all there. You add another trend line right there. Again, this little sucker, some of these guys trade like EK cheese. Just once the turn comes in the lines, boom, straight down, straight up, straight down. This has been kind of a grind up more so here, but now you have a nice clean up trend line, so a break of that will be a sell signal. There it is, 33 minutes. I covered the stock market, GDX, gold, silver, and every component of GDX. Not bad. Let me get this out to you guys, and I'll continue to hunt for some trade ideas. This has been Randy Finney with Right Side of the Chart. Have a great day.